Ever wondered how you can retire comfortably without relying on a pension or Social Security? Imagine having a steady, reliable income stream that supports your lifestyle regardless of the economic climate. What if I told you that this dream can become a reality by harnessing the power of dividends? Yes, dividends! With the right strategy, you can build a portfolio that pays you to live the life you've always wanted. But how exactly do you retire on dividends? Today, we're going to explore the essential tips and strategies to make this happen. Did you know that some of the wealthiest investors, like Warren Buffett, rely heavily on dividends to grow and sustain their wealth? By the end of this video, you'll understand how you can use the same principles to secure your financial future and enjoy a comfortable retirement. Let me tell you about Jane. Jane is a regular person, just like you and me. She didn't have a huge inheritance or win the lottery, but she had a dream of retiring early. At 45, she decided to start investing in dividend-paying stocks. Fast forward to her 55th birthday, Jane retired comfortably, living off the dividends from her carefully built portfolio. She travels, enjoys her hobbies, and never worries about running out of money. Jane's story is a testament to the power of dividends in achieving financial independence. Why is this topic so crucial for you? Because planning for retirement is not just about saving money. It's about ensuring a steady income stream that can sustain you for decades. By mastering the art of building a dividend portfolio, you can achieve financial independence and enjoy the peace of mind that comes with knowing your expenses are covered no matter what. Ignoring this could mean running out of savings when you need them the most. But with a well-planned dividend strategy, you can have a reliable source of income, protect yourself from inflation, and even pass on wealth to the next generation. So, how can you start building this income stream and set yourself up for a worry-free retirement? Let's break it down step by step. If you want more tips on building wealth, hit the subscribe button. Your support helps us create more valuable content for you. Step 1. Building your dividend portfolio. The foundation of retiring on dividends starts with building a robust dividend portfolio. This is not just about picking any stock that pays dividends. It's about choosing quality companies that have a history of paying and increasing their dividends over time. First, start early. The sooner you begin investing in dividend-paying stocks, the more time your investments have to grow. Think of it as planting a tree. The earlier you plant it, the bigger and stronger it will become. Next, focus on selecting the right stocks. Look for companies with a solid track record of paying dividends consistently. These companies are often referred to as dividend aristocrats or dividend champions. They typically have strong financials, stable earnings, and a history of increasing dividends annually. Imagine investing in companies like Johnson & Johnson or Coca-Cola. These are well-known, established companies with a long history of paying consistent dividends. Johnson & Johnson, for instance, has increased its dividend for over 50 years. By including such reliable companies in your portfolio, you can create a steady income stream that supports your retirement. But don't just take my word for it. Let's look at some key criteria to consider when choosing dividend stocks. Dividend yield. This is the annual dividend payment divided by the stock's current price. Aim for a balance. A high yield might be tempting, but it could also indicate risk. A yield of 3 to 5% is generally considered healthy. Dividend payout ratio. This ratio shows the percentage of earnings paid out as dividends. A payout ratio between 40–60% is ideal as it indicates the company retains enough earnings to grow while rewarding shareholders. Dividend growth rate. Look for companies that not only pay dividends, but also increase them regularly. Consistent dividend growth is a sign of a company's strong financial health. Industry and economic moat. Invest in companies with a competitive advantage in stable industries. These companies are more likely to maintain and grow their dividends over time. Step 2. Diversification is key. Diversification is a fundamental principle in investing, and it's especially important when building a dividend portfolio. By spreading your investments across various sectors and industries, you reduce the risk of any single investment negatively impacting your overall portfolio. Think of diversification as not putting all your eggs in one basket. If one sector underperforms, others may do well, balancing out your overall returns. Consider spreading your investments across different sectors like healthcare, technology, consumer goods, and utilities. For instance, You might invest in companies like Pfizer, healthcare, Apple, technology, Procter & Gamble, consumer goods, and Duke Energy, utilities. This way, if one sector faces challenges, the others can help maintain your income flow. Diversification also includes geographical diversity. Investing in companies from different countries can protect you from economic downturns in any single region. By diversifying both sectorally and geographically, you create a more resilient and stable dividend income stream. Step 3. Reinvesting dividends for growth. Reinvesting dividends is a powerful strategy to accelerate the growth of your portfolio. Instead of spending your dividend payments, reinvest them to buy more shares of the same or different dividend-paying stocks. This process leverages the power of compounding, where your earnings generate even more earnings over time. Let's say you receive $1,000 in dividends from your investments. Instead of using that money for expenses, you reinvest it into additional shares of a dividend-paying stock. Over time, these additional shares will generate their own dividends, creating a snowball effect that significantly boosts your portfolio's value and income potential. Reinvesting dividends can be done automatically through dividend reinvestment plans, DRIPs, offered by many brokerage firms. These plans allow you to reinvest your dividends without incurring additional fees, making it a convenient and cost-effective way to grow your investments. Step 4. Setting realistic goals and expectations. Setting realistic income goals is crucial for your dividend retirement strategy. Understand that the amount you can expect to generate from dividends depends on the size of your portfolio and the dividend yield of your investments. Start by determining your annual income needs. Once you have that figure, you can work backward to calculate the portfolio size required to meet those needs based on an average dividend yield. If you aim for an annual income of $40,000 and you expect an average dividend yield of 4%, you would need a portfolio worth $1 million. It's important to set realistic expectations about the growth of your portfolio and the income it can generate. Markets fluctuate and dividend payments can vary, so it's essential to have a conservative approach and a buffer for unexpected expenses or market downturns. Step 5. Regularly managing and monitoring your portfolio. Building a dividend portfolio is not a set-it-and-forget-it strategy. Regularly managing and monitoring your investments is crucial to ensure they continue to meet your income needs and goals. Review your portfolio at least annually to assess the performance of your investments. Look for companies that consistently increase their dividends and watch out for any signs of financial trouble that might lead to dividend cuts. If a company you've invested in announces a significant dividend cut or shows signs of declining financial health, it may be time to reevaluate and consider replacing it with a more stable dividend-paying stock. Also, stay informed about market trends and economic conditions that might affect your investments. Adjust your portfolio as needed to maintain a balanced and diversified mix of stocks. By actively managing your portfolio, you can ensure that it remains aligned with your retirement goals and continues to provide a reliable income stream. Now that you understand the steps to build a sustainable dividend income, it's time to take action. Start planning your dividend retirement strategy today. Begin by researching and selecting dividend-paying stocks, setting up a diversified portfolio, and reinvesting your dividends. Start building your dividend portfolio now and take control of your retirement future. Remember, the journey to a comfortable retirement starts with a single investment. By carefully planning and managing your dividend portfolio, you can achieve financial independence and enjoy a worry-free retirement. Dividends can provide the stability and security you need to live your dream life in retirement. So, why wait? Begin your journey to financial freedom today and ensure a prosperous and fulfilling retirement. The power to secure your future is in your hands. If you found this video helpful and want to see more content like this, please consider subscribing to our channel. Your subscription is like a donation that allows us to continue creating valuable and informative videos. Hit the subscribe button, and together, let's build a community of financially empowered individuals. Thank you for watching.